All right, interest rates. If you have a credit card, student loans, maybe a mortgage, it is very, very important for you to understand what your interest rate is and what that number actually means. We're going to talk about two things in this video. One, you'll understand what it actually means for an interest rates to be high or low, and why people get different interest rates, even though they might be applying for the same loan. The interest rate is the way you measure how expensive or cheap it is to borrow money. So if the interest rates are low, it is relatively cheap to borrow. But when interest rates are rising, it is getting more and more expensive to borrow money. Let's talk about a couple terms. First, the principal. The principal is the amount of money you actually borrow from a bank or financial institution. And secondly, interest. So after you've paid off your loan, the total amount of money you paid back is the principal, which is the amount you borrowed, and a little extra. And the extra part is called the interest. Now, if you have a good credit history and a high credit score, the bank or financial institution will know that your finances are set. And when they lend you money, they know that the risk of lending you money is pretty low. So because you have good credit history, you get a low interest rate. But on the flip side, if you have missed a few payments, if you have a lot of credit card debt, a lot of student loans debt, then the bank are a little more hesitant, or the banks know that you're a little bit of a riskier investment, so they're going to charge you a higher interest rate. In other words, it's more expensive for you to borrow money. There are two kinds of interest rate calculations: simple interest and compound interest. This is actually very important to understand, but there's quite a bit of math involved, so we're going to cover this in another video. But now it's time for homework. That's right, you get homework from YouTube videos. All right, so your task for today is pretty simple. Find out what your interest rate is on one of your loans. Maybe you have a couple credit cards, some student loans, or some mortgage. Just look at your statement and figure out what your interest rate is. And that's it for today.